And there we go. Change my mind. I'm just going to close it here. 120 handles total profit here. Beautiful. That secures around $1,600 copy traded account. So all right, welcome in everyone. Hope you're all doing well for yourself. In the previous clip, you just watched me make over $1,000 with one singular trade today on the NASDAQ. And what I'm going to do here is I'm just going to get in here and I'm going to break down and give you guys every single thing that I utilized to actually make that money and take that trade. Coming on the charts here, we're just going to take it the whole way back to the hourly chart here. And as we can see here, this market was severely bearish in the beginning stages of this New York session. And just kind of watching that buy, not trying to chase the move, and I'm waiting for a very clear and obvious structured model instead. So with patience, coupled with waiting for my model, we were able to get paid. And how do we do that? Well, on the hourly chart here, we see from the 9:30 opening, this thing drops down. Okay, but what does it drop down into specifically when we're buying on that reversal? Well, we need some type of higher time frame key price point to work off of. Well, number one, if you take a look here, this is actually an old new week opening gap. So this is offering fair value for larger funds. So coupled with that, but also if we go to the daily chart quick, you'll see that this green shaded area here, go to the daily chart and you'll find that this is half of this discount daily wick right here. So this large wick here, it's the same exact thing as a fair value gap. It's inefficient and price reverts to 75%, 50%, and the low. So in this case here, I'm watching it drop down to 50% and I'm utilizing that as my higher time frame key level to hunt my model, right? So let's go the whole way down to the 15-minute chart now. And what you're going to see here is we have an immediate large rejection away from new week opening gap here, these two red lines, and the halfway of that daily wick. Now, one more thing I want to bring to your attention here too is if you take a look here, I'm going to take us down to the 1-minute chart quick and we're going to scroll the whole way over from yesterday's action. And what I'm going to do here is I'm going to annotate, here's yesterday's 9:30 opening right here. Here's the respective low that it created, these relative lows. We're going to go ahead and extend that forward. And this here is your classic time-based liquidity pool because it was generated around 9:30 a.m. So along with us trading down into these discount key levels, right, we're actually sweeping out a very key and specific pool of liquidity, right? So all that stuff coming together, I'm seeing us drop down to that price point. We're obviously in a severe discount, right? Price drop down here once, twice, 3 times. It's a classic 3 drives pattern on the 1-minute chart down into all these discount levels. Now what I'm looking for is a clear structured model like I explained. Now back to the 15-minute chart before we get into the meat here, right? Along with what I'm going to show you on the 1-minute chart, which is the actual model, as you can see here, we have a very large 15-minute fair value gap left behind here, as well as up here. So we have 2 inefficiencies left behind from this severe drop down from 9:30 opening. While everyone wants to chase this, right, we allow it to drop down in these levels and show us its hand. All right, so with that said, let's scale back down. And as I mentioned here, we had a classic 3 drives pattern, which is basically 3 consecutive swing lows being broken to the downside into a key level, right? And we have 3 of them here that I just mapped out. Now what I'm looking for is a change in the steady delivery. Well, as you can see here, price drops down with these 2 down close candles, drops us down into that sell stops and the low into new week opening gap. These 2 down candles, that's what I'm looking at. So what I'm going to do is map out the opening. And now we watch this opening and we see it pierce above the opening. That right there is our original change in steady delivery. But I'm not going to jump on it just yet. Whenever we're this bearish, I'm not the guy ever to try and pick the bottom. Even though I know when things are likely to reverse with a specific time of days, which I'm about to get to in a minute, I don't try to enter in on the very first retracement, okay? What I do instead is I allow it to create a clear structured turnaway, which is an intermittent term low. So we have a swing low here, higher swing low to the left, and then we cement this higher swing low to the right, and then we displace away. That right there is a classic intermittent term low formed at those key levels, and then we get displacement. Okay, this is very, very key because this is the only confirmation in price that I need. Now, none of this stuff matters, and I'm telling you guys, if we don't know what price is drawing towards on the opposing end. What is it drawing towards? Well, both of my take profits were this swing high here. Okay, take profit 1 and take profit 2 was above this swing high right here. So what am I actually targeting? I'm targeting trailed buy stops for everyone that's been shorting in the New York session, because I know when they drive this thing down into key levels and it leaves behind these clear and obvious highs here, there's number one, there's going to be a lot of trail buy stops above here, and also people just shorting here with a standard stop loss above that. So by default, I know that this is the market is likely to draw to next. All right, and eventually it makes its way up into here, but I didn't really care about that because I was taking my profit right here and being content with 102 handles, right? Now, what pieces this all together here, now that we have our entire model here, is time. Inside of the New York session, 90% of your corrections are going to form from 10:30 to 11:10 a.m. So let's go ahead and map out that time zone. So this specific concept that I'm showing you guys right now gives me a significant edge inside of this marketplace whenever we have a context like this. Whenever I'm watching price drop down, I know to not chase this thing whatsoever. And I also know not to try and force any type of early long entry when it's not there until we reach 10:30 a.m. The market tends to create these corrections from 10:30 to 11:10 a.m. All right, and if it doesn't form at 10:30 like we did here, right, when we took our entry, it'll form from the 10:50 to 11:10 macro. So that's why I make this entire time zone, and this is where you want to hunt corrections like this to go against those who have been making money, right? Now, as we expand here, what was I actually entering in on? Well, I'm actually going to show you that. So it's just a matter of scaling through your time frame, so don't get confused. Okay, so I simply just scaled down to the 3-minute chart. I saw with that expansion there, we dropped down into this 3-minute fair value gap, and that's exactly where I enter. I'm looking at this as reaccumulation and where smart money is buying, and get covered at the nearest term lowest hanging fruit up here. So that'll conclude this market review for you guys, and I certainly hope you got something out of this, and I'll be seeing you in the next one.